Welcome to TradeTheMBI.com. This is John's reporters for the 26th, and no real surprise there. We saw the short-term buyers in the steel here on the DOC rising, and that was enough to hold support. We had just filled back, wasn't a positive extreme from the ES, but Nasdaq had been getting a little bit more extreme play, and we had been getting quite a few of them on the intraday charts that needed to get filled. Came right back to the 76 support, held up just fine there because short activity every time it spikes has been just getting softer and uh, nothing real traumatic. I think the market is behaving quite normally at this particular stage. It's just waiting for some kind of major directional move. Of course, you have the budget thing, but that's a lot of nonsense, as it always is. And eventually, it's going to be resolved. Uh, just a question of when. But the Nasdaq, from this strength standpoint, is just not stoppable at this particular stage. And this was a reality that we knew that given what interest rates were doing and the bond market recognition of that interest rates were going to stay elevated, the market would have to rise accordingly. And I know it defies a lot of people's logic in, how much growth and things there are, but you have deflation. Well, I mean, not deflation, but you have the uh, devaluing of markets with inflation, and therefore the numerical number of the market needs to rise. It's always taken place that way, and uh, gets confusing for some. We don't really care because we have the readings, and that's all that really matters overall. Uh, and again, this was no difficulty in seeing where Treasury's yield was going to go. There was just a lot of hope in the ridiculous move that thought the Fed was going to have to ease. It was never part of their plan. They made it very clear. For some reason, people just didn't believe them. Now they're doing quantitative easing, but they're doing it a different way, and that's just a liquidity thing that they're providing to the banks because they know they can't just keep flushing money out to regular individuals because that really created a demand problem with the amount of money chasing fewer goods. It was a problem. Um, this way, they keep banks afloat, and we'll see where we're at with the loan demand. The banks still have a major issue because they're trapped with a lot of that low interest paper that just gets worth less and less. From an oil standpoint, moved right back down to where it needed to be. So that overall, it feels like the market's got things pretty well tightly wrapped up and doing the things necessary to keep it in a comfortable range. And that's kind of what we're seeing now. From an intraday standpoint, though, it gives us a lot more flexibility from a daily standpoint. NASDAQ obviously looking good. S&P is just mean reverting at this particular stage. Um, and that's just creating a softness in gold. And you're also going to see it in crypto, but I think that that's just a prelude to a buildup and the potential for those to move back under any kind of negative scenario. Uh, really will give them a significant spike. So, plus, again, it was this continual issue with confidence. You can see positive extremes going all the way back to here. Um, you need to be filled. Now, there's a couple others that goes all the way back down. So there is on the downside of a real negative situation, further drawdown for Bitcoin and the others. So that's worth keeping in the back of the mind. And even the dip below the red line back here eventually will get revisited. But you just have to wait for the readings on those. I mean, it was the same thing with what we were talking about with the positive extremes from this 50K, and literally filled it back in, took out some extra stops that were below it, and then literally right back on the exact same spot where the algo began in the first place. And that's the beauty of being able to see it. None of this is surprising, though some people think that, once the market moves a little bit lower, it's just going to cascade. No. You've got to have serious underlying issues in order for that to take place. And overall, the resilience of the consumer in that to maintain this inflation and literally sucking up a lot of that liquidity that had been thrown in there. And won't be long, and they will have drained that. And at that point, things really start to return more to early 2000 period rather than that fake period from the crash in '08 all the way through till, well, just post COVID. From a intraday on the 5K, you can see we made the pre-market highs, came off of them a little bit right in between these same algos, pressed up against the upper side of it, and literally bounced around quite a bit until we started to see that those supports were going to maintain themselves. And they did, right in between these ranges. And every little pop back, still filling them back in just a little bit. And post market, we can see a whole lot of nothing, and right at the exact same angle of it. We don't create the lines. The lines are created from the readings that come from the indicators, and we just follow it. And you can see, how the market plays right in between them. It's not accidental, and I think that showing it over the years, it really points out, that relative nature and how significant some of these things, from a math standpoint, are, and the way the market really is reacting. And it has nothing to do with what you hear in the headlines or anything else. It's just a matter of following what we see and trading accordingly. So that's the long and the short of it for